All right. Welcome to the London session recap for Euro Dollar on Tuesday, the 29th of August 2023. So daily chart, we know we're bullish. We are coming off the strong swing low, pretty much into the extreme demand, which I spoke about at length in yesterday's recap. So take a look at that if you haven't, in which potentially the next bullish swing leg can start from, right, if this low is going to hold. However, we can just see that bearish order flow is holding, so it's not really confirmed until we at least see that bullish change of character and start to see daily supply failing. But we are in an area of value for which we can expect that potentially to happen, but it hasn't happened yet, so we can't ignore that fact. The 4-hour chart, we are bearish. I've basically just zoomed into price action to look at this as our current range. So because we are coming off that extreme daily level, I'm very wary of the fact that potentially the 4-hour chart could now be ready to switch bearish, right, if the daily swing pullback is over. But it doesn't have to happen. We could easily just have another bearish leg, right? We can't assume structure will change until it actually does. On Friday, we obviously had that rejection from supply, which failed to take out the low. And since then, we have literally just been trading within this 4-hour, the high of this 4-hour candle and the low, okay? So it's not really, or when that happens, when you kind of get a big volatile move and then price is trading within it, very often it's tricky because you're basically trading a range, you're trading the kind of complex internal structure, and there's no sort of immediate clear 4-hour bias. Right, so that's why you may just want to sit on your hands until we break out of the range, or just be a little bit more picky with the positions that you are looking at. So what will happen next? I don't know, potentially we'll take this 4-hour high, mitigate the supply and continue down, or perhaps we'll stay within here and continue down, or perhaps we'll go up and change trend. I have no idea, okay? So that's where we can then look at the M15 to see if it can paint a bit more of a picture. Let me play this forward to nearer Frankfurt Open. So M15 swing structure is bearish. It's the same as the 4-hour swing structure that I have mapped on this occasion. After that swing breaker structure here, what do we expect? We expect an M15 swing pullback. That was then a good signal confirming that was starting when we got the bullish IBOS here. We then had bullish internal structure, which pulled up to mitigate that premium level of M15 supply, right, within the 4-hour supply. So at that moment, as we then get the bearish IBOS, the M15 internal structure has now switched bearish. So this is then where this becomes our strong internal high, right, as denoted by this line here. And that's when we would expect the strong internal high to hold. And therefore, that means we would expect the large internal structure to remain bearish until it takes out the weak swing low. So in other words, we've had the M15 swing pullback to an area of value. The internal structure then shifted bearish. So that's when we expect price to make its way down to form that next bearish boss. However, what happened? Well, we tried and failed to take out the low on this initial attempt. We swept it by about 0.1 pips. So it's not the most convincing sweep in the world, but it is there nonetheless. But kind of more importantly, what happened next? We aggressively retraced almost more than 50% of that prior bearish sell-off, and it started to form this sort of clear internal of the internal price action, which I'm just referring to as the small internal, okay, with these green dots. And we had that yesterday, and that's where I took a sort of quick scalp in here long, looking to play that movement up, because this is just one big massive supply zone with one big straight push. So very often these zones can fail from news, and also it's just a massive zone that had already had a failed reaction, right, from the supply level we'd already pushed up. So when we put it back in, I'm just looking for a quick movement, literally just to capture a little bullish reaction from this leg, okay? Not high probability at all. I spoke about that in length yesterday, but it was a trade I was willing to take nonetheless. Now, during Asia, or overnight during the last Asian session, we did have another bullish II boss here, right? That always sounds so weird when I say it. Moving to the upside. Okay, so coming into today's session, you can kind of approach it in a similar way as to here, in that we're looking for the small internal pullback down into a level of demand, potentially seeing if the small internal low will hold to see if we get another bullish leg. Okay, but you have to understand that this back here was already reasonably low probable idea, because you're trading against the large internal structure, right? This small internal structure with the framework that we follow is probably only bullish to facilitate this large internal pullback, right? And then we would expect it to switch bearish once the large internal pullback is over, right, to then do this. The reason kind of why I was willing to be a bit more aggressive here is because, we still had room to the upside. I was anticipating potentially that this high is weak because it's kind of tried to, it's kind of failed to take out this low, et cetera, et cetera. It's a bit of an iffy trade, right? But coming into today, we've pulled literally right up into the extreme, mitigated the very sort of extreme, refined supply within this strong internal high. So if this strong internal high is going to hold, right, and if it's going to remain bearish, then what do we expect to happen next? We expect the small internal structure may switch bearish. Okay, it doesn't have to, but it's looking, there's a higher probable chance that this low is now going to fail rather than yesterday because of where we're coming off. So, longs are even lower probability. It doesn't mean they can't play out, and doesn't mean you shouldn't take them. It's just about me explaining like the odds of today's scenario for looking for longs compared to yesterday, in my opinion, are lower probability than yesterday. Okay, if you're going to use those two sort of yardsticks of comparison, right? Which is sort of what I tried to explain in the pre-session analysis. So we mitigated that extreme supply, we had the bearish change of character, and we started to move to the downside with decent momentum. We have two sort of unmitigated levels of demand in which you could potentially consider longs if you were considering longs. As I was saying in the pre-session analysis, this zone formed around 10 p.m. UK time, so that is the daily rollover. That is when liquidity is pulled from the market and spreads blow out. But in more simple terms, it's a low volume time, right? It's not when we expect institutions to be transacting. And what is the whole purpose of all of the analysis we are trying to do? Well, we're trying to find the footprints, the footprints of institutional activity on the charts, right? So I'm always a bit skeptical of these zones that form around the daily rollover because it's not likely that there was much institutional activity during that time. So when price comes back to them, I view these zones typically as low probability as they often fail. Okay, not always, but generally, especially if this is not a high probability idea already, I'm really not keen to trade from here, right? So if we play price forward, it has a little bit of reaction, but bearish order flow just stays. There's no entries from within here, so hopefully no one took a loss, and then we push down a bit lower. Now we've come into this M15 demand range. Okay, it was very, very, very choppy price action, so that's where I just refined the zone to the 1 hour candle. The 1 hour can be very, very helpful to kind of clean zones up like that, right? And I just drew the M15 range essentially on there. Okay, so just looking to see, if this small internal structure is going to remain bullish, right? This being the low and the high, obviously, then this is kind of the demand that's likely going to hold. Of course, we could push a little bit lower, mitigate some random stuff in this wick and push up higher or whatever, but this is kind of that clear and obvious zone. So now, again, before we kind of dive into the intricacies of the entry models and all of that stuff, I want to reiterate, longs are not to that high probability, okay? And hopefully you guys understand as to why. Yes, we are coming off higher time frame demand, right? Like I said, on the daily and the 4 hour chart. So there is potential that next daily bullish swing leg could occur, which means the 4 hour and the M15 swing would switch bullish, okay? And we can think about that, but let's not ignore the actual confirmed structure that we have, which is overall bearish, right? That is what we have as true facts to work with, okay? So the fact we came off here, yes, it does give me a bit more confidence to kind of take these aggressive longs from within here, but ultimately, the actual confirmation of structure we have is still bearish. This is still the strong internal high, right? We've had quite a corrective pullback overall. We've mitigated the strong, the extreme supply at the strong internal high, right? We're starting to sell off with strong momentum. So typically how the markets move, they move with impulse, corrective pullback, impulse. And you can see how that's starting to look like that may happen. Not a guarantee, but it has to be in the back of your mind now that, longs are not high probability, and I really tried to kind of make that as clear as possible in the pre-session analysis. So what I was saying in that as well is, if you look, is that your options are kind of, well, just be patient. You don't need to trade and wait for structural alignment. So what would structural alignment be? Well, one form of that would be waiting for this bearish II boss here, so that the small internal structure is aligned bearish with the large internal structure, right? Because then you would have strong confirmation that that large internal pullback is over, and then you can see potentially price may pull back, and then you can look for that trade, right? That would be structural alignment. And yeah, that'd be kind of one of your scenarios to wait for. If you don't want to be patient and you want to kind of try and get involved and see if you want to try and capture this movement, then your options are either jump down into an entry model straight away, or at least wait for something very, very clear and make sure that you have enough risk to reward to get long in here against supply, right? Because obviously there's an M15 supply zone here that flipped this level here and broke this low. So it's already quite aggressive because this could easily hold and we could push down lower. So already not looking that great. And or you could wait for like an M15 chalk and supply fail to at least confirm recent order flow is shifting in your favor and this low might be holding. Okay, that's your other option. So kind of now we got that out and over the way. Let's look at how you could potentially have traded this zone if you wanted to get involved. Okay, now we do have valid M15 lid here because this is a structural low, and with the rules that I use 98% of the time and the rules that we teach in the course, this is that only nearby lid, right? Because this is an actual structural low. This candle here isn't valid lid, but I'll talk about that in a second. So if you want to use this as M15 lid for this POI, right? It doesn't matter how far away it is. I get this question so many times. I tried to make it clear in the course, but it doesn't matter how far away the lid is. The mechanical way in which we can define whether or not you can use this lid is by identifying where your PBL is. So you can do that on a lower time frame, and then you simply wait for that PBL to fail. Okay, so it doesn't matter how big the distance is between this POI and the lid. All right, that distance is pretty much irrelevant. It's simply you identify the PBL that liquidated that lid, and then you look for that to fail. Okay, and that's how we can then say the sell side liquidity below this low has been used by institutions to get long, and we define that by waiting for the PBL to fail. Okay, so that would be basically the PBL. You want to look for the rules that we recommend, right? Because that's the nearest structural low. But if you're going to do that, well, that PBL is going to be somewhere within here. By the time price gets there, where are we? We are within M15 supply, right? So I'm not going to then want to trade against that on a lower time frame, especially with how low probability the longs kind of are already. So at that point, you may as well wait for that M15 supply to fail, which is essentially the M15 PBL, and wait for that M15 chalk. So you're just waiting for that M15 order flow to shift in your favor. Okay. So again, to reiterate, if you're going to use that lid, you may as well just wait for price to break out of here before considering. So that's option one, and that would be liquidity entry model one, which is using M15 lid into an M15 POI mitigation. The other option is that we get a clear M1 liquidity entry model here, okay? But just you want to make sure there's enough risk reward for you at least, or at least enough room to ideally, potentially move your trade to break even by the time it gets to supply, because otherwise that supply can hold, and then you're buying from a weak low, okay? So let's still look and see if that forms. Let's see if we get a strong liquidation on the M1, if price action will load. Well, here we go. So we come in and we need to see something strong built here, which nothing has, right? We're clearly just selling off. So let's see if we can get a fake break or equals. So price moves to the upside, we get a bullish M1 change of character, which means now potentially, or that strong liquidity has now been built behind this M1 low here, right? Because this M1 low has led to a break of structure. Fractal is enough for the entry model, right? It's more than enough for our rules. So now you can set your alert on that M1 low. If you want to take this M15 idea, like I keep saying, it's not the best idea in the world, so you could be ignoring this. But if you are happy to trade from this zone, then I would be waiting for this low to break, okay? Price doesn't break the low and it starts to shoot up and up, okay? So this entry model ends up not occurring, okay? There's no valid M1 liquidity entry model 2, right? There's no fake break or equals here because this low never gets liquidated, okay? But the entry that was there that I know a few of you were looking at and took is a bit more of a discretionary one, okay? And that would be if you use this candle here to the left as valid M15 lid, okay? Now, the reason why it isn't valid in my plan and the way we recommend it and the way we teach it in the course is because this is not a structural low on the M15, right? All of these candles break the previous candle's high, which means it's all part of the up movement. The actual nearest structural low down here is this candle here, right? That is the next available liquidity. So here and here are kind of the only two nearby levels. This is not valid with our rules because it's not a structural low. That is all part of the up movement because all of the previous candles break the previous candle's high, right? But because it's kind of that, it's a bearish candle, you know that if you were to look on a lower time frame, what would you see? You would see a structural pullback and a movement like that. So on a lower time frame, it would be valid. So you may, when you see kind of a convincing bearish candle like that, you may want to use a bit of discretion and use that as your medium time frame lid, okay? I would recommend just get consistent first before you start doing that. Otherwise, you may see entries everywhere, and just stick to the rules we recommend. If you do want to use it, try and do it in higher probable areas, higher probability trade ideas. And for kind of reasons I've tried to explain in this breakdown, I wouldn't view this as that high probability, but I can understand if you want to, right? You know, it's the extreme demand at the low. Perhaps you think there's enough risk to reward even for a quick 2 to 5 hour move. That's cool, absolutely fine. The main point I just want to take is that for 95% of you, if not more, this probably isn't valid lid, okay? But I personally am willing to use that in rare circumstances. I did share an example on the markup, but I'll quickly see if I can find it on the 4 hour chart of kind of a clear example where I'll use that as sort of lid. And it was on the 4 hour chart, and it would be like here, right? So imagine, you know, we're looking for this 4 hour move to continue. We have this clear 4 hour level of demand that led to a 4 hour swing boss. It was also a valid, you know, 4 hour flip zone, etc., etc. I don't need to fully break this down. The idea that I want you to see is, imagine you know this is a high probable POI, but you want to use some lid. Can you use this 4 hour low as valid lid? Well, with the, like I keep saying, with the rules I recommend, the rules I use, technically no, because that's not a structural low, because all of these candles break the previous candle's high. So that is all one up move. So the only available lids kind of in this range is up here or behind this low, right? Because they're actual structural lows, okay? But obviously we know that we're to look on a lower time frame, there would be a clear pullback and a clear movement up. So like if you were to look here on the 1 hour chart, that would be obvious liquidity. So I'm willing kind of in those scenarios to read between the lines a little bit and, you know, view that as actual valid lid, okay? But do it in the right areas. But hopefully that makes sense for some of you who had valid, you know, queries around that, okay? So if you do use that kind of discretionary lid, how could you have entered? Well, if we draw it across, this is then where it becomes sort of that liquidity entry model 1, where you've taken M15 lid into the M15 POI mitigation. So then this becomes your M1 PBL, right? This is the point before the liquidation, the supply that liquidated that M15 discretionary lid. Then you get the PBL fail and chock, somewhat of a V shape, at least it's in one candle, it's there. And then you obviously enter an extreme because there's no flip. And essentially that would be your entry there, okay? If you use that. So absolutely valid, but only valid if you have it within your plan to use that style of M15 lid. So I'll leave that down to you whether or not you want to have that in your plan. And that would be the type of entry. And obviously management is down to you. But in that scenario, I'm just gonna put my phone on do not disturb, it's annoying me. There we go. In that scenario, you obviously be very wary, like I keep saying, of this M15 supply, because obviously at that time you wouldn't know if 100% if this would fail. But in that instance, if you use that entry model, you do, you know, I would anticipate that, well, you would know at that point, because if you're going to get tagged in, if you use the trail to break even method, you'd be able to see that, well, I'm going to be able to trail to break even before we get to supply. So that can mean, you know, it's worth the risk to you, okay? So now we have a nice big V-shaped reaction from that extreme demand zone. We have the M15 PBL fail, supply failure, chock, etc., etc. It's actually looking kind of okay now to look for longs to potentially see, right, if this M15 demand now is going to hold. Just make it a pretty blue box. There we go. To see now, are we going to get this move to target the week high and go to the upside, okay? And that's absolutely valid. It is 100% valid to think that. You now have that extra sort of bullish order flow change, that extra confirmation I was referring to in the pre-session analysis. But if I just play it forward a little bit, by the time price starts to pull back, this is where I wrote in the euro dollar analysis channel literally at this time before the setup occurred, or as it was about to occur. I'll play it a little bit forward a bit even more. Basically, as we were coming in, that I wasn't considering longs anymore. I'm not interested. I'll let it play out without me. I'm not bothered. The main reasoning overall, to try and keep it somewhat simple, is just because I already, before the session even started, wasn't keen on longs, right? For all the reasons I've explained, I see potentially that this high can hold. We're coming off the extreme supply. We're selling off with momentum. We're starting to see demand fail. I don't really want to risk my capital. I kind of already took a risky long within here, but that was more in the middle of the range. Now we've, you know, rejected the extreme premium. I'm just not feeling it. It's coming towards the end of the session. We've moved to the upside, and then we started calming down aggressively. It's just not filling me with confidence to want to take a low probability trade in this overall environment. Now, the other thing that I didn't draw on the markup, that's a little bit, it's just getting a bit messy with all the annotations, so I didn't want to draw it on, but I'll talk about it now. The other thing is that we did have a bit of a small pullback here and a movement up, and then price did break that low, okay? So the reason why I didn't mark that on as sort of my updated small internal structure, and then that being the small bearish IBOS, is because really, you know, we look at the actual pullbacks and we be consistent. To me, this was more of a consistently sized small internal structure. So I wouldn't have confidence that that's the true small IBOS. This is then your strong internal high, and this is the pullback to do that. I wouldn't have confidence with that. I'd have more confidence in this being the low, and then if price is coming up, I would be very wary of shorting here, right? Because that could be the move that does this. But when you see price pull up and then start coming down aggressively, it is, I'm aware in the back of my mind that is somewhat of a break of structure here. There's just too many doubts. The whole setup is now getting a bit iffy. I'm not that keen. There's no M15 lid. It's coming towards the end of the session as well, which I'm not that keen on. And if we look at the actual entry model that's set up, there was no liquidity entry model within the POI. The POI itself, if I just play this forward a little bit, ends up failing. Okay, so as soon as we trade through the POI by literally a micro pip, that zone has now failed. And now the only entry model you can play in this area, if you follow our trade plan, is liquidity entry model 4, which is a sweep of the M15 structural low itself. But to confirm that, what do we need to see? We need to see the M1 PBL, right? The supply that liquidated that low. We need to see that fail, because why do we need to see that fail? That's our mechanical way of saying that institutions have potentially used the sell side liquidity below the low in order to get long. We want to see the PBL fail to confirm that. We want to see that buying pressure come in. That's obviously the same area in which the M1 shock occurs, and then it fails there, right? Decent-ish V-shaped reaction. Okay, it takes a little bit of a while to go, but there's some momentum coming in. And that's when I typed in at pretty much this exact moment into Eurodollar, just saying I'm not interested, right? For me, it's a valid entry. It meets my rules, but I don't view it as enough of a higher probable trade idea for me to want to risk my capital at this point, okay? So I didn't take it. Hopefully you guys understand the reasons as to why. It's just overall, I don't have enough conviction to want to take a low probability trade. So you would have been tagged in the trade if you took it there. Then we wick break the high. So if you use the trail to break even method, it's up to you whether you use wick breaks or candle body closure. Obviously, if you use wick breaks, that's a more aggressive way to be able to then remove your risk. But you're going to increase the probability of you being tagged out for break even, and then price goes in your favor. I prefer to use a candle body closure for this, because in theory, I should only be taking trades for the most part when they are high probability MTF trade ideas and high probability POIs. Therefore, I want to give my trade the most opportunity that it can have to reach its target. So if you manage trades aggressively, there's going to be a lot more times when you can potentially take unnecessary break evens. So that's why I prefer to kind of wait for that candle body closure. And even then, rather than necessarily always moving it to break even, depending on where you're into, like trail behind that new strong low, so you give the trade opportunity to like play out, right? Otherwise, just wait for the candle body closure. But it's totally individual to your risk tolerance and up to you what you want to do. And then it chopped around and eventually failed, and it brings us to wherever we are now. Yeah, we're just chopping around sideways. So yeah, price action is a bit complex, but just remember on the 4-hour chart, we are trading within this zone. So it's not going to be too high probability until we kind of break out of this. The other factor I forgot to mention, as that did play a part in my mind as to why I wasn't keen on that last entry model, right? When we were selling off down here, was because of how the 4-hour was looking. You can't read massively too much into it, but kind of how my brain sees this overall is we've just been selling off and selling off and selling off and selling off, right? But clearly making a larger series of lower lows and lower highs, right? That's undeniable. And since we've made this lower low, we've had a pretty corrective pullback overall. We kind of see this corrective price action, right? We know that this is a strong M15 internal high, and what's the 4-hour chart done after that corrective pullback? It's forming this evening star formation, right? Spike up, strong candle closure down. Yes, the 4-hour candle hadn't fully closed at that point, but I only had about 10 minutes to go. That just doesn't fill me with confidence that we're going to go higher. I mean, we absolutely could do, kind of have this iChock, a fractal sort of 4-hour demand within here, whatever, like that could happen. That's why I'm saying I don't personally read too much into candlestick formations, but it's just another little thing, like looking at this price action, it doesn't scream get long to me. So just overall, if I have that many if, buts and maybes, why am I going to risk my capital on it for like a quick, it's just not worth it. So that's why I left it alone. But if you took it, look, it's valid, but like I keep saying, liquidity entry model 4 is a more aggressive entry model because the demand has failed. So you were literally just basically playing a sweep of this low. And with all of the confidence we had here, it doesn't fill me with confidence, and I can see this potentially being the move. I don't know. So New York's not looking great at the moment because we kind of have this misalignment. So I would probably advise being a bit more patient. waiting for that alignment, waiting for that small IBOS, seeing if we potentially get a pullback, and then potentially looking for that, or just waiting to see if we break out, and then we can figure out on how terms, in terms of how price action looks. But yeah, a bit of another long breakdown, but I kind of wanted to go into detail there. It is what it is. Complex price action at the moment with that misalignment. So you just got to be patient, or look at other pairs, look at GU or whatever. I don't know how GU looks at the moment. Or yeah, just crack on with other stuff. But yeah, hope you guys took some value from that, and I'll see you next one. Cheers, guys.